Most new traders don't lose money because they're unlucky. They lose money because nobody tells them what trading is really like. Think about it. Someone hears about the stock market from a friend. Then they jump on YouTube or Instagram and see people showing off luxury cars, huge profits, and a lifestyle that looks almost too good to be true. And before they know it, they start thinking, man, trading looks easy. That's where things start to go wrong. Because trading isn't some cheat code for getting rich. It's a profession. Just like becoming a doctor, an engineer, or an athlete, it takes time, skill, experience, patience, and discipline. But most beginners skip that part. They focus on the money first, and the learning second, and that usually ends badly. So in this video, I want to talk about a few mistakes that almost every new trader makes, and how you can avoid them. Mistake number 1. Trading based on excitement. A lot of beginners see a stock shooting up with a huge green candle. Their heart starts racing. They get hit with FOMO, and they jump into a trade without thinking. A few minutes later, the market pulls back. Now they're stressed. Now they're panicking. And now they're wondering why they're losing money. The truth is, trading isn't a video game. There's no reset button. There's no practice mode. When real money is on the line, every decision matters. And one of the biggest mistakes new traders make is trying to win their losses back immediately. That's called revenge trading, and it usually turns a small loss into a much bigger one. A smart trader doesn't trade based on emotions. They wait, they follow their plan, and most importantly, they protect their capital. Mistake number 2. Stopping the learning process. A lot of traders reach a point where they think, okay, I get it now. That's dangerous, because the market has a way of humbling everybody. No matter how much experience you have, there is always something new to learn. New conditions, new mistakes, new lessons. The moment you think you've figured everything out, the market usually reminds you that you haven't. Mistake number 3. Ignoring your life outside of trading. This is something a lot of people don't talk about. Your trading results are heavily connected to your daily habits. Poor sleep, constant distractions, no routine, no exercise, no self-control. All of that affects the decisions you make when money is on the line. Professional traders don't just manage trades, they manage themselves. Because if your life is out of control, your trading eventually will be too. And the last mistake, unrealistic expectations. Most beginners want to turn a few $100s into millions overnight. I get it. We've all had that dream. But successful traders think differently. They understand that building wealth takes time. They understand the importance of capital. And they understand that having another source of income can take a huge amount of pressure off their trading. Because when trading becomes your only hope, you start forcing trades, you start chasing profits, and you start making emotional decisions. A smart trader focuses on the process, not the outcome. Even after a loss, they review their trades. They keep a journal, they learn from mistakes, and then they come back better. Because in trading, consistency beats excitement every single time. And honestly, that's a lesson most traders learn the hard way. So if you're just getting started, avoid these mistakes early. It could save you a lot of money and a lot of frustration. And if you're serious about becoming a better trader, stick around. I'll be sharing everything I learned on this journey, the wins, the losses, and the lessons that come with both.